For today's Wealth Talk, we're talking market volatility, and whether you're a seasoned investor or just starting out, market swings can be nerve-wracking. Well, Gary Garrison with Asset Protection Wealth Management joins us with some tips to help you stay steady when the markets are anything but. Gary, thank you so much for joining us
Ansley,
today.
thanks for having me again.
Absolutely. Okay, so what do we need to know about understanding market volatility?
Well, we need to learn a lot, but let's talk about the definition first. You know, the definition is how much and how quickly share prices move in the market. And it's not inherently bad to have stock market volatility. In fact, it's a natural part of investing. The difference is how you react to the market. So you don't want to overreact. You want to understand that volatility is normal and it happens, but you just don't want to overreact to that. So even the stock market over the years, has a trend of going up. Now there's certainly been some big bumps along the way, and there always will be, but that's just a natural part of investing to have that happen. But the trend is always up, so you don't want to overreact and sell because of volatility.
What do we need to know about diversification?
Well, you don't want to put all your eggs in one basket. We've heard that our whole life, and it still, is true today. You want to diversify over several asset classes. For example, you might want to have stocks and bonds and real estate, even cash. But having it diversify like that, if one of them falls, for example, if stocks drop, you've got money in these other investments that might hold steady or even increase.
How important is it to have a plan?
Very important, very important. That's what we do. And we recommend it tremendously as you ebb and flow and get ready for retirement. But you want to have a plan so that when markets get very volatile, you don't, jump off course and go and do something that you regret doing. You look back and I better stick to the plan and not sell or not buy or do something hasty like that. So to have a good plan, you want to set your goals, what those goals are. You want to identify and know how much risk you're okay with having, and we determine all that for our clients. And then you want to just have annual reviews and make sure that you're on target. Life events happen. People get divorced, have children, grandchildren, what have you, and it's important to maybe modify your plan when those life events do occur.
I do think that is important because, like you said, so much can change within a year. To go back and do a little check-in to
But make sure that your financial advisor that you're working with develops a good plan for you, and that's what we do. So
you had mentioned that it's not always bad that the market is volatile. So how do we take advantage of that? Good
point. There are opportunities to do that, and so when stock market prices drop, if you're working with a financial advisor, they can actually work with you and help you find really good, high-quality stocks that are selling at a discount. And you can relate to this. It's kind of like if you go in your favorite store, okay, and everything in the store is on sale. Well, you don't go in and buy the whole store, but you go in and pick out things that you might have wanted all along because they're on sale. It's the same thing with the stock market.
The problem is sometimes I want to buy everything within the store, and that's not always good.
Well, hey, if you can do it, that's great. That's fun.
So this is 401k season. What do we need to know about this?
Yeah, so, end of the year, it's just that time of year. People change jobs, they lose jobs, they retire, what have you. And a lot of them have 401ks where they work, and they don't know what to do with it. They just don't. We get calls all the time about that. So I wanted to mention to your viewers that they have an outlet. They can go to our landing page, which is your401krollovers.com, and download a complimentary guide to 401k rollovers, and it'll tell you the mistakes to avoid.
There's a QR code. You can just scan that, and it'll take you right there. Gary, anything else that we should know about this specific topic?
Well, you just always want to be aware and mindful of volatility, and when you have, a morning where the market's down 1,000 points, and most people are like, "Oh my gosh," just let it ride. And if there's a time in the economy where we really need to take a look at adjusting your plan, we can do so. But by and large, those are normal parts of volatility in the market.
Yes, perfect. And again, how can people reach out to you? What's the best
way
to do that?
501-225-9045. You can call or text that, scan the QR code, or go to our website at apwealthmanagement.com. And they can even go up there and click My Score on our website, and they can determine exactly how much risk they're willing to take.
Love that, Gary. Great information from you.
Thank you, Ansley. Great to see you again.
Thank you so much for joining me, of course. All right, we'll have more Good Morning Arkansas after this.